Today, we're breaking down 3 new big laws from 2025. The Genius, the Clarity, and the Anti-Cbdc acts. We're going to be talking about how they can put more power and money back in your pocket. I'm going to explain what they do, what the downsides is, and how they can benefit everyday people like you and me. And plus, if you're tired of the financial system treating you like an afterthought, then like this video, subscribe, and share with a friend. With that being said, let's get to it. This video is for educational and informational purposes only. I'm not a financial advisor, and nothing in this video should be taken as financial, investment, or legal advice. Always do your own research and consult with a licensed professional before making any financial decisions. Okay, say for instance, you're sending money to friends overseas. Western Union and other payment services will charge heavy amounts of fees, but with stablecoins, which are basically crypto forms of the US dollar, cost pennies to send across borders. It's cheaper, basically. The Genius Act, or short for Guiding and Establishing National Innovation for United States Stablecoins, is the law that puts rules on these stablecoins so they're safe for regular people. It passed in July and it was signed by President Trump. It says only approved companies like banks and other tech companies can make them and issue them. They gotta back every single dollar with real cash or with short-term United States treasuries. And plus, they have to do monthly reports on their money stash so you know it's legit. No more shady operators crashing and taking your funds. What it does is plain and simple. It locks down stablecoins as a tool for fast and cheap payments. It bans them for being treated like risky stocks so we don't get entangled with the SEC drama. And it fights money laundering with ID checks, keeping crooks out. The good for me and you is lower fees on remittances. We can save our community millions of years. Since a lot of people is always sending billions and billions of dollars home, it can help them out a lot. Platforms like Uber, DoorDash, and Amazon will soon integrate these. And plus, it makes the dollar king in the digital realm. And it's going to create a lot of tech jobs too. Yeah. So just imagine paying bills or splitting rent with these stable coins. Fast, cheap, without all the bank traps. Now here's some cons to that. Some watchdogs like the Consumer Report says that it doesn't go hard enough on protections. Big tech companies, they can just jump in without banking rules, and that can lead to more hacks and unequal access if you're not tech savvy. And if the rules are too loose, one bad apple can shake trust in all the digital money. The bottom line is, this act levels the field a bit, turning stablecoins from the Wild West gamble to everyday hustle helpers. Next up, we have the Clarity Act. Now, the Clarity Act, the full name, the Digital Asset Market Clarity Act of 2025, is like the referee stepping in to sort out everything with the crypto market. It passed the House, but it's still going through the Senate. Basically, it draws clear lines on who's in charge of what in the crypto space. It handles most of the digital stuff like Bitcoin trading and stuff like that to the CFTC. That's the commodities crew, not the SEC, who's like the strict stock cops. stock cops. For stablecoins, it lays out a clear rule. They're not securities. It carves it out as a payment lane, so it's easier to buy coffee or whatever. It sets rules for exchanges and wallets. It mandates anti-fraud checks and ensures stablecoins play by the same reserve and ID rules as the Genius. Basically, there's no more gray areas where regulators can play hot potato with our investments. Because if any of y'all know, the last few years, it has been a rocky mountain with these regulators, specifically Gary Gensler at the SEC. Everyday people can benefit from this because the clarity means more safe apps and platforms popping up, tailored for people like you and me. Think community-focused crypto wallets with low fees, or DeFi loans that don't require a credit score from your broke college days. It could even start fintech startups in your local communities and create jobs in those underserved spots. And with clear rules, your money is safer from scams. Yeah, less chance of you losing all your grandmother's savings to a rug pull scheme. Now, the downside to this act is that the critics say it's too pro crypto. It says it's allowing big players to dominate while the small fish, meaning us, get sidelined. It says that it can allow enforcement to lag, leaving a room for pump and dump hustles to target new folks. And plus, if the CFTC gets overwhelmed, delays could slow innovation we need. This one's about making the system fairer, so you can dip in without drowning in red tape. And the last one, the Anti-Cbdc Act. Now let's talk about the scariest one of them all, a CBDC, or a central bank digital currency. Imagine the government issuing its own digital dollar, programmable, trackable, like cash, but with Big Brother watching every swipe. They can make your stimulus check expire if you don't spend it quick, or they can block certain transactions that they don't like. Does that sound dystopian? It is. That's why the Anti-Cbdc Surveillance State Act passed in the House again in July 2025, this year, and it slams the door on it. Now, what this act does is it basically bans the Federal Reserve from creating, testing, or rolling out a retail CBDC. It's one for you, one for me, and not just banks. No direct Fed accounts for individuals, and no using it for money policy tricks. It codifies President Trump's executive order from earlier this year saying that the Fed can't touch this without Congress is okay. It basically keeps your money, your digital money, in your hands, private hands. Just like stablecoin. Probably asking, how does this benefit us? Well, let me tell you. This benefits us because, first of all, privacy. No government should be peeking at our rent payments or our church tithing or anything that we do in our communities, right? You agree with that. I hope you do. Now, this is huge for communities that's like historically been surveilled or redlined. This also protects against control, like freezing accounts for protesting, like we saw in 2020 and previous times before that. It pushes innovation for private stablecoins, which could lead to cheaper, freer money options without Uncle Sam in your business. And con is some people saying that we're falling behind. 134 countries are testing CBDCs right now for faster global payments. And without one, the US dollar might lose its edge abroad, hiking remittances costs for families. But then again, that's where the genius and the Clarity Act step in. And so, there you have it. Genius secures stablecoins for cheap sins. Clarity clears the path for crypto plays. And the Anti-Cbdc guards your privacy like a fortress. These aren't just laws. These are tools to build wealth on our terms, breaking cycles of fees and exclusions. If this helped, smash that like button, share with your friends and family, and drop a comment. Thank you so much for watching. I will see you guys next week.